So Mr. Samrat and his wife, Mrs. Komal, they hold 12% voting power in a company ABC Private Limited. Each. So note the point here, each. So 12% voting power held by Samrat and wife. No. 12% voting power held by Samrat and wife together is not the question. Held by both of them individually 12%. Okay, so that total is important. Why it is important, we shall see. Next point. Mr. Samrat and Mrs. Komal are working in ABC Private Limited. Okay, so they hold in ABC and they are working in ABC. However, Mrs. Komal is not qualified for the job. So as soon as this point is given, it should trigger your mind. What should trigger your mind? So in the question, you will have all from chapters from now. I have mentioned the topics that we are going to discuss. But in your examination, you will have questions from all the modules, all the chapters. So what should qualify? What should get into your mind as soon as you see this word? She is not qualified for the job. Yeah. So it says like on Mr. Samrat's influence only, Komal has got a job. Okay. So though she is not fit, so they are having significant influence. So that on Samrat's influence, I can say. So in technically, we can say significant influence. Okay, they are. She is holding this job. So you need to strike. It needs what needs to strike is clubbing of income. So Komal is not fit for the job. So you are all chartered accountants. Will you get job in an IT field? No. But still, if you get some other field, maybe due to some influence of some other person. So your income is not yours. Your income will be clubbed with the husband's income, whoever has influenced to get this. So that's clubbing provisions would apply. It's not qualified for the job. Now, from the following information given in respect of financial year 21-22, you are required to compute the gross total income of Mr. Samrat and Mrs. Komal for assessment year 22-23. So what do I have? What else apart from this influence fact? Dividend of rupees 22,500 and rupees 45,000 has been received by Mr. Samrat and Mrs. Komal respectively from the company. Because they are holding shares, they'll definitely get dividend. Okay. Mr. Samrat has instructed the company to pay 50% of the dividend you pay to Kajal. Who's Kajal? Daughter of Mr. Samrat's deceased brother. So the brother is no more. So his relative, he's asked the company to pay 50% of the dividend to Kajal. Okay, fine. Next. Now the salary. So for their shareholding, they've earned dividend. For the salary part, salary earned by Mr. Samrat and Komal are 8,50,000 and 5,50,000 respectively. So we are giving you various income that both the persons have earned. So what income falls to whom is what we are going to find out. Next. So we got in dividend income from other sources covered. Salaries income is covered. Now business income. Business income earned by Mr. Samrat from his sole proprietary business. So he's a shareholder of ABC, getting a salary and dividend. Apart from that, he holds a business separately where he is the only owner. No other influence, no other interference. So that income earned by Mr. Samrat amounts to 15,60,000. One more IOS, interest on fixed deposits, earned by Mrs. Komal here, which is 9 lakhs. Then there comes another person, our Kuti son, minor son, their son Akash, who's aged about 10 years, having PAN, received interest of rupees 54,000 from a bank on a fixed deposit created by his grandfather in his name. So he holds a PAN, his grandfather has put in an amount in his account, and thus he is getting interest. Okay, but no other revenue for him. Now, okay, before I go on to the solution, is the question all clear, students? Yes, any doubt with regard to this?
Yes, ma'am.
So you know the picture of Komal's and Samrat. So we got to find what income will be added in Samrat's account, what income will be added in Komal's account? Any transfer from here to here, any other transfer from an outside party will be added to their income, and find out what is the question asked. Compute the gross total income of both the people respectively. Okay, so the answer should start with the same note, as in computation of gross total income of Mr. Samrat and Mrs. Komal for assessment year 22-23. So put in the columns. So Mr. Samrat, I need to find out. Mrs. Komal, I need to find out. So they've given you 5-6 line items. So let's start on the 5 hits. Salary. So salary, Samrat also earns from working here. Komal is also earning. So Komal doesn't have the qualification which is required for the job, but still she has been recruited, still she is working, and still she is getting salary on that account. So it is definitely not an income attributable for her technical knowledge or professional qualification. So in that case, it's not her income. It will be added to Samrat's account. Okay, so we know the concept behind this. So how do I present this? So salary of Samrat goes to Samrat only. You all know under salary, we get a standard deduction now. So no calculation, standard deduction under section 16, just 50,000 flat. So reduce that part, 850 minus 50, you get 8 lakhs under his own account. Komal, not fit for based on her qualification. So her income is due to Samrat. So club the income in Samrat's account. Salary of Komal is also included in Samrat's account only. She also gets a standard deduction as per the act. So her net income from Komal's salary is 5 lakhs. Yes. So you got to give a note. Either give it right behind this point, or you can write note number 1. As in salary earned by Mrs. Samrat has been included. Why you are adding here? Why did you not put in Komal's account? You need to give a note. Because the main point is what? As I said in the question, 12%, 12%. In case if they are not having substantial interest, then this problem wouldn't have arisen. So since they are holding a substantial interest, which is more than 20% of voting power in any company, which will be taken for his not. But you can say, ma'am, Samrat is holding only 12%. No. Substantial interest calculation is 20%, including spouse's percentage also, along with the wife. And plus, she doesn't have the qualification. Because of this influence or because of this substantial interest in the company only, she's got this job. So it is clubbed here. This note you got to give. You can directly give as in represented here, or just write note number 1 and after your solution you can give. But you cannot, if you don't give, you will not get the required marks. Okay, students? Salary part clear?
Yes, ma'am.
Yeah, next we move on to, they are having business income. So no HP, no house property, they have business income. So business income, yes, only Samrat is doing business. Komal is not included there and she also doesn't have any business of her own. So that is directly attributable to Samrat, no problem. Dividend, again from the same company. Okay. Dividend, individually they are getting. So dividend doesn't have connection with the qualification. You hold shares, you get dividend. That's all is the link. So qualification related is only the salary part. So that which is we have already clubbed. So dividend is separately accounted. Komal is also holding shares. Samrat is also holding shares. So for their portion only dividend comes. So it is taxed in the hands of the recipient. So taxable in the hands of Mr. Samrat as per Mr. Samrat is what amount? First, he is receiving 22,500 dividend, which is given directly. Samrat received 22,500. So that means what? What is hidden? You can tell me. What will happen when company gives you dividend? What is that point they will consider and pay you?
Shares.
Yeah, on dividends are given on the number of shares you hold. But they have decided to give you 20,000. Will they give you the entire 20,000? How will they give you? They will deduct something called as
dividend distribution tax.
Yeah, they will yeah, the tax portion will be deducted. Okay, so they'll pay only the net amount to you. Okay, so in the question it is given, he is entitled for a dividend is not the question. So I'm just reading, going back to the question. It says the dividend actually received by him is so much. So you got to really, what point needs to be highlighted is, it is net of the tax. They will not pay 100% dividend amount. They will pay after a tax of 10% on that. So if it has been given, he is entitled for a dividend of 22,500, then that means it is at 100%. But it says he has received. So received amount is always net of tax. So you have to calculate. So if this is 90%, which is 10% tax, what is 100% you calculate? So 22,500 into 100 by 90. Also for Komal the same way. 45,000 is at 90%, which she has received after tax. So find out what is 100, cross multiply, you will get actual amount of dividend received. And there's one more, Kajal's dividend the company has paid on his instruction. Okay, so that's the other point we got to mention here. Note down and give an account to it. So 22,500 is at 90. Find out what is at 100. Okay, and then that into 2 is because Kajal is also being given dividend. So 50%, how ma'am into 2 exactly we are able to find out? Who can give me the logic? Probably the company, if it has paid 100% dividend, 50% he is instructed to pay to Kajal. The balance 50% has been equally distributed between Samrat and has been given to Samrat and Komal, no, not equally, has been distributed to Komal and Samrat. So the balance 50% is Kajal. So you just have to find out the other portion of it. Okay, and same calculation for 45,000. And finally, interest on FD, which is Komal's own FD. She has deposited and she is earning interest. So add up all the total income. Okay. We are totaling it. Why are we totaling? We have one more minus income. No, you should not be asking. We are totaling to find out whose income is greater, whether the husband's or the wife's. So Samrat's income is greater. So now this will be added. This minor income earning 54,000 is given in the question. That is again TDS. Tax will be deducted at source. 10% is on interest tax portion on interest income. Okay, so 90% is what we find out. So the gross figure is stated here, which will be added. However, for minors income, we'll have an exemption under section 1032 in to a value of 1,500 per child. So since this is one child, you get 1,500. The net income to be added in Samrat's account is 58,500. So you have two major heads, Samrat, Komal. Inside the two heads, give these sub columns. Okay, so inner calculation is for all the adjustments, and the outer column will have only the final amount from each relevant head. Is it clear?
Yes, ma'am.
Yeah, so you can add up everything. Already you have totaled up before this minor income. Now just add this portion alone. You get the gross total income of the two people respectively. So easy, no clubbing of income. Yeah, so that's that. You've got to remember the various points that they have noted. So comparatively, number of points to be remembered is lesser. That's why we say this is easier portion. 2. Mr. Rajesh, a resident individual, has furnished the following information in respect of income and loss earned by him for the financial year 21-22. A resident individual. So till here, you don't know what is the question. Okay, though we know what chapters we are discussing, but in exam you'll have to read and then find out what question. Okay. What all he has? Salary, long-term capital loss from property, interest on self-acquired property, loss from let-out property, capital loss on a long-term capital sale of shares on which STT has been paid, let-out loss, self-occupied interest, So interest which you are paying on the loan taken for your self-occupied property. Winnings from lottery, cost of the acquiring the lottery tickets, business profits after deducting normal depreciation and also an additional depreciation. This is my profit. Long-term capital gains on sale of house property. Now do you understand which question? So we are having losses in the current year, losses brought forward from the earlier years. So it is definitely to find out what can be set off and what can be carried forward and what no adjustment can be made. So the other details of brought forward losses are unabsorbed depreciations pertaining to the year are follows. So this is from the earlier years. Brought forward business loss from manufacturing business, unabsorbed normal depreciation, brought forward loss from owning and maintaining racehorse. Okay, so 3 old losses. Compute the gross total income of Rajesh and the amount of loss that can be carried forward. What is a major question lies in the last part. If he opts for provisions of section 115 BAC for the first time. So who can say what is 115 BAC? Yes, what is 115 BAC, people? Hello. You all must be knowing. Also, I think last class we were discussing about it. What is 115 BAC? No? Yes, Naina, Nail, Hijam, no idea?
Yeah, special rates for taxation, right?
Yeah, very good. Special rates for taxation. So you don't have only 3 rates. You have many rates starting from 5 to 30 for every 2.5 lakhs increase in your income. But no deductions you can claim. That's the most important point. No deductions and no exemptions except very few. Okay. And also you cannot set off most of the losses. Most of the losses which you have earned cannot be set off. Yes, so that's the intricate point. So though he may be, this person is incurring a lot of losses, brought forward losses, interest on housing loan exemption, it's all difficult for him to claim. But the rates are kind of lesser. Let's move on. So how do I approach this problem? They have asked you to find out the gross total income. So start with that. Notes can be given wherever is it required. So it's all about notes. There's more than working notes. It is all note now. Note concept. You got to the provisions of the act. You have to write. Why I did not set this. Why was this allowed? What is allowed in this? So all the theory part of notes is required in this. So now let's start from the 5 heads in the order. Salary income. Is he earning anything? So this is of Mr. Rajesh only. Okay, so no other persons included here. So salary income, is he earning? Just going back. Salary 3,40,000. Against salary, actually, loss from let out property can be set off. But you remember BAC provisions for set off and carry forward of losses. Losses from the let out house property cannot be set off. In terms of salary, you will not incur any loss. The next head of income is house property, where if you have incurred a loss that we cannot set it off for Rajesh. Yes, you get the point. So that's 115 BAC. If people are opting, there are many restrictions on that. Yes, students. So loss under the income from house property is not allowed to be set off because he is opted for 115 BAC. Next. So income from house property, if as he earned anything, he has 2 house properties. One is let out at Mumbai and the other is self-occupied. Let out is a loss that we are not setting it off, so no adjustment. But generally, interest paid on a self-occupied property is allowed to be claimed as a exemption under section 24. But here, Mr. Rajesh has opted for 115 BAC special rates of tax. So that is also not possible him for to claim. He cannot, he's not allowed on this self-occupied property to claim interest amount of amount given in the question. So nothing can be claimed as a deduction here. So 340 is from salary, no set off of loss from property, no set off of exemption availed in respect of interest paid on the self-occupied property too. So the loss, this 75,000 loss, no, will be carried forward to the next year. This loss from the Mumbai property, which he did not set. So no adjustment in the outer column. Next, third head, profits and gains from business or profession. Yes, he has gained an amount of 96,000, but what was given in the bracket? Normal depreciation 10,000, additional depreciation of 4,000. After providing for this only, he has arrived a gain from business as 96,000. But 10,000 normal depreciation, okay, can be claimed. But additional depreciation, though he is in the manufacturing concern, he cannot claim this since he has opted for 115 BAC. So add back. My profit is after considering these two items, right? Add back the 4,000. So now my profit is 1 lakh. No profit. I cannot claim this additional depreciation. Yes, that is a brought forward business loss. Okay. The order of carrying forward. Anybody can tell me how is the loss carried forward? First, adjust for your current year depreciation, which is already adjusted. Yeah. Expenditure on scientific research, family planning, and then adjust the brought forward loss. So since those items are not there, brought forward loss to be adjusted first. And then, yes, anybody? Then your unabsorbed depreciation, normal depreciation only from last year, and then unabsorbed capital expenditure and family planning. So I just have brought forward loss and unabsorbed normal depreciation. So this I can set it off against the business income itself. So my net business income from business profits and gains from business or profession is 55,000. Any doubts, people? There's absolute silence. Are you all understanding or totally not getting the point? How do I take it? Yes, Naina, others? Yes or no?
Getting it, ma'am.
Yeah. So if you know the provisions, like even if you've not known, ma'am, I did not study, so I'm not able to understand. Just note on the points that I'm telling you. 115 BAC opted persons cannot claim so many things. So when you're studying it, then it will make sense. Okay. So though if not studied, not thus the session is only for those who have studied and come. It's okay. Some people, yeah, we are all fault. Most of us fall to the next category only. But just note on the points. So I think profits and gains we have covered. The fourth head of income, capital gains. He is having a gain from sale of house property. Very good, 1,40,000. But then he's having a long term. So both are LTC. Okay, long term. So against a long term gain only, I can set off a long term loss. No, but this loss is on sale of a share. Can I set off sale of shares against a gain? Yes, with effect from 1st April 2018, where this new provision has come, right? 112A. So if for this gain exceeding 1 lakh, where you have paid STT, security transaction tax, then you can set off the loss if you have arrived any against a long-term capital gain. Yes, you get it? So it is possible to set in that manner. LTCL can be set off only against LTCG. But this LTCL relates not to a sale of property, ma'am. It is relating to a share amount loss. But since STT has been paid for gains exceeding 1 lakh, it can be set off. This is the new rule applicable. So I can set off this, no problem. 25,000 is done. Winning from other sources, 40,000, ma'am. That's a cost attributed to it. We bought the tickets, no except expenses you can claim in respect of lottery tickets. So 40,000 only is the total. Whatever you want is the income. So this is his gross total income. The question restricts you to find out the gross total income. That's all. Then they have asked you to find out what losses can be carried forward for the future years. Yes, one we already found out. Salary is nothing. Income from house property will be able to set off only if you have a house property income. So these are the losses that will be carried forward. In house property loss, this also can be carried forward only if you have a gain from the racehorse. Otherwise, you cannot carry it forward. So loss from house property against the loss from against a gain from house property, and this also against a gain from racehorse. So just mention the points. If you know the section number, do give. You don't know the section number 73 or 74 A3. You don't know means don't give. If you know the provisions, whatever notes you can give which are right, you definitely know. Please give. If you create an impression that you know the concepts and you relevantly give. When I say whatever, don't give anything unrelated. Whatever is related to the questions, notes wise, you have to definitely give. Yes or no? Was this easy? BAC. A person opting BAC, how can it be set off? So I think BAC, what all is allowed, what is not allowed, to an extent you must have gained an idea. Those who didn't know the topic. Yes or no?
Yes, ma'am.
I'm moving. RT is RT. Resident, individual, provides the following information of her income or losses for the year ended 31st March 21. So definitely you know it's a clubbing, even in question if you get the paper exam. Salary, income, so much. House property let out and net annual value. Not gross annual. Okay, net annual value is so much. Share of profit from the firm in which she is a partner. So if you have studied the chapter relevant, things should strike in your mind. Okay, this is exempted. Net annual value, so don't have to compute that part. So it should strike your mind then and there. Loss from specified business covered under section 35 AD, so much. Income from a textile business. So this is specified business 35 AD. Normal textile business before adjusting the following is so much of income. So 3,30,000 is before adjusting the following. Current year depreciation, brought forward unabsorbed depreciation of earlier years, brought forward loss of textile business of the earlier years, and then that's with regard to business gain. Long-term LTCG on sale of debentures which are unlisted. So unlisted means what should come in your mind is the rate of tax will differ. Long-term capital loss now on sale of equity shares, STT not paid. So much. Long-term capital gain on sale of equity shares listed in recognized stock exchange, but STT is paid at both the times, acquisition and sale is so much. So with regard to capital gains, I have three categories. Sale of shares only, but STP paid is a gain. Sale of shares only, STP not paid is a loss. Sale of debentures, unlisted, loss. Sorry, gain. Okay, remember gain, loss, STP, non-STP, so on. And then last, income from other sources, dividends, so much. Repayment towards housing loan taken from a scheduled bank. And out of this, rupees 3,28,000 was towards payment of interest, and the rest is towards principal. So you have taken a loan for a property that you have bought. That's how you got your net annual value. Yeah, net annual value is what minus what? Who can tell me? How is net annual value calculated, students?
Sorry, deduction of standard.
Standard. Is it standard?
GAV, gross annual value, minus the tax, municipal tax. Then the deductions, we get an NAV. Then we have to deduct.
Okay, so it's a gross annual value minus municipal tax that you pay, you get the value. So that value, after that, you've got to prepare, give the standard deduction and then the loan, all the loan interest payments. So then what you get is your income from house property. Okay. The final line is income from house property, which is going to be taxed. Okay. So just remember, we'll do the problem. Gross total, find out her gross and the amount of loss that can be carried forward. And now what does it say? What if she doesn't opt for 115 BAC? So there we saw a problem opting for 115 BAC. No, normal. Three rates of tax only applicable. Deductions can be claimed, exemptions can be claimed, set off and loss, no restriction, normal. Okay, so this is all the provisions that we may be quite familiar with. Salary income. Yes, so salary income is 8,20,000 given in the question. No, you did not find out. And against salary income, you will definitely have no salary loss, but you will have what can be set off is income from house property, any loss there. So to what extent is you definitely don't know. So that's a question mark, keep it on hold. How, because nothing is given. What is given is net annual value and interest payment part. You have to do the working note and find out, or directly find out through the next line, income from house property. So you all gave me the answer. So gross annual value is the rent, arrears of rent all collected. That's the gross annual value. Less municipal tax, the tax payment that you're paying to the authorities. The net, what you get is the net annual value. So after that, you will be deducting the standard deduction under section 24, that is 30% is one, and interest paid is the next amount. So what you get now is not net annual value. What you get now is income or gain or loss from the house property. Yes, now clear?
Yes, ma'am.
Yeah. So this is given in the question, 1,20,000 given. So there, after that, I have 2 points to be done. One is standard deduction 30%. So on that 30% amounts to 36,000, 120 la 30%. The other they are saying, I'm just reading the question again. 485 has been paid to the housing loan company, bank. Out of this, 328 was 425. Out of this, 328 is interest payment, and the balance is principal payment. So now what we need? Now do we need 485 or 328 or the balance? For calculating the income from house property, out of this, what amount is relevant?
You will get a deduction on interest, so 328.
Yeah, so 24 only requires the interest payment. What have you paid to the bank with regard to the interest portion? So 328 is relevant for me. 485 is a total amount, balance is a principal payment. What I need is only interest payment. So 30% NAV is 36,000. 328 is the interest on this. Reduce that. So 120 net annual value less 364. I'm getting so much of loss. It's not a gain, it's a loss. So this loss can be the same year. Since it's in the same year, I can set it off against salary income. Once it is brought forward, I cannot do so. If it is this loss, if it is carried forward in the next year, I can set it off only against income from house property. But since this is current year loss, house property loss, I can set it off against salary income too. So 2 lakhs. But why, ma'am? 2,44,000 is the loss. Why am I setting 2 lakhs? What is allowed under section 71 is only to the extent of 2 lakhs. Balance you have to carry forward. Not that you cannot set it off at all, is it? You can carry forward, which will be set off against income whenever you are earning from house property and not salaries anymore. Okay, so 2 lakhs can be set off, and the net salary income is how we got 6,20,000. So by this, we also arrived at the loss from house property. This 44,000, I am going to carry forward. Loss to be carried forward for set off against only from the income from house property in the future years, if any. The 2 heads of income done. The third, profits and gains from business or profession. You all know, and I was telling, share of profit in a firm where you are a partner, that income is exempted. Okay, under section 10(2)(a). The very second line item itself is this only. First is what? We had this session in the last taxation class, I guess. That was exempted income, right? Last week we had. So agricultural income exempted, and 2A is share of the profit of a partner from a firm. That is exempted, so don't bother about the amount. Next, what do I get under business income? I have incurred a loss under specified business as mentioned under section 3580. So there's a list of businesses, cold storage facilities and all that. No, so out of that, I am into one of the specified business. So what am I going to do? I have gone the loss. So any loss from a specified business cannot be set off against normal business. Whenever you are incurring gains from the specified business only, it can be set off. So those who are writing down, if you're writing down points, though you don't know the provision, specified business loss set off only against specified business income. So carry forward this also. This year, no income from this business. However, normal another business I have textile business, 3,30,000. Out of this, they have clearly mentioned, unlike the last question, here it is mentioned that no depreciation has been given effect to. Before deducting the following items only, the income is 3,30,000. So you give effect. You all know the order for, we just discussed it too. First set off the current year depreciation. Then capital expenditure, family planning expenditure in the current year. Current year items are all over. 2 items or 3 items. Now brought forward from last year's. Brought forward loss of last year, then brought forward loss, that is the unabsorbed depreciation of the earlier years, and then brought forward capital expenditure and family expenditure. Okay, this is the order. So if any available only, I can set off. So first I did the current year depreciation, still profit is there. Then brought forward loss of earlier years. So 190, still profit is there. Then unabsorbed depreciation, I have actually bigger amount. Unabsorbed depreciation is 1,85,000. So the order is 53 first, 190 first, and then 185. But then what is my available profit after the 2 items? 87,000 only is available. So to that extent, I will set it off now. Balance, I will carry forward. 185 minus 87, I will carry forward. So no income from this business or profession over capital gains, the 4th head of income. First, the gain that you have arrived on which STT has been paid, you have got a gain. So capital gains, we actually segregated into 3. Remember, 2 loss and 1 gain. The gain is a long-term gain. So all the long-term loss can be set off against that. Long-term, yes? Yes or no? So first, STT has been paid 250. So I can set off what? Here. First, the unabsorbed balance depreciation, which we missed out earlier, right? That I am eligible to set off first. Okay, 185 minus 87, which we set out there. So balance 98,000 was available, right? So that I will set it off. Next. Okay, so I get 1,52,000. Then I have a then this is a gain amount from this bracket. This on which STT is paid, you are going to pay a tax rate at the rate of 10% as per section 112A. This is subject to 10%. That's just an information. You can keep this information. Oh, sorry. Now I have another gain, like 1 loss and 2 gains. I remember. Yeah. One more gain is sale of debentures which are unlisted. So that's 1,50,000. Okay. Now, what is the loss that you got to set off? I have a long-term loss on sale of shares on which STT is not paid. Yeah. On which STT is not paid. So once again, I'm just going back to the question. So long-term gain on sale of debentures 1,50,000. Sale of shares STT not paid is 150, and gain is 2,50,000. Okay. So this 250, I adjusted the unabsorbed depreciation, fully exhausted. So balance I have so much. Now gain on debentures. Since it is unlisted, this is taxed at 10%. Unlisted debentures, if you are arriving a long-term gain, that is taxed at 20%. Remember that. Next, I have a loss. Okay, I have a loss on which STT has not been paid. So that loss, if I set off, okay, I cannot set off entirely. I'm able to set off again around to the extent of 1,50,000. So set off of long-term loss on the sale of equity shares, STT not paid is so much. Yes, so that you set off and nothing is available under the set, under the long-term capital gains on sale of debentures. Now I have income from other sources, dividend taxable in my hand, add it up, you get the gross total income. Now what are the losses I'm going to carry forward and to how many years? Salary, none. Lost income from house property, yes, right? Income from house property, we had no. We adjusted 44,000 is not adjusted. So that can be carried forward up to 8 years. Then specified business can be set off again specified business, that is about 67,000. Balance all the losses have been set off. Clubbing of income. So sorry, again, again a clubbing of income. So remember the first provision, first question that we had here, Vikas is holding 33% in Kaya Limited. So significant influence definitely. Now Mrs. Rinki, okay, is working as an accountant in Kaya Limited and getting an income from salary as 4,60,000 without any accounts but no qualification in accounts. So you also don't think whether we can also join that way. Okay, you should all be good and expert in accounting. And Mr. Vikas also received 35,000 as interest on securities. And now Mrs. Rinki owns a house property which she has let out. And rent received is 6,000 per month. Now compute the gross total income of Vikas and Rinki for the assessment year 21-22. We have seen this problem, so it will be easy the same way it got to be worked out. So since she's not qualified and he individually is holding more than 20%, there is significant influence and therefore clubbing provisions will apply. So that one note you definitely got to give. Directly club everything, either at the beginning or at the end, you give why are you clubbing? Why can't she pay tax on her own income? Can't he pay tax on his own income? But why are we clubbing? We got to show to the examiner, establish to the examiner that you know the point and that's why you're clubbing. Okay, don't be in a hurry to finish the problem. Attend it and write it in the logical manner. Okay, as the person doesn't know, exhibiting to him all the knowledge that you have with regard to the subject. So, computation of the gross total income of Mr. Vikas, and you're going to find out Rinki's also. Okay, so which will be clubbed anyway. So, income from salary. So, I'm just going to the question. So, 4,60,000 is what she is getting as salary for her accounting job in the year, and he is getting 35,000 interest on securities. Rinki is getting income from house property. So these are the three things that are given to you. The first one, Rinki's income will definitely be clubbed with Vikas because she doesn't hold qualification. So 4,60,000 gets added under Vikas's head. And other than that, his salary details are not given, so leave it. House property, is it given? No, his house property income, nothing is given about it. Business income, about his business income is not given, omit. Capital gains not given, yes. Interest from other sources, income from other sources, interest on securities is there, so add that to it. So his total income is 4,95,000. Simple question. Now compute the gross total income of Mrs. Rinki. She is getting a salary, she got a salary, but now not in her hand because it is clubbed in Vikas's hand. So you cannot tax double, you cannot do double taxation. Already in his hand, so nothing for her. House property, yes, that's her own house property. Okay, not given as a gift or that, it's in his name. It must have, we assume it is in her name and she is getting interest out of it. 6,000 into 12, that's you assume as a gross annual value, less municipal tax, net annual value, less deductions, 30%, you add to it, you'll get the figure. You don't know anything about interest portion, so just leave it. When no information is given, you can leave it as blank. And then business income, no, nothing she earns. Capital gains, nothing given. Interest income from other sources also not for her, nothing is given for her. So that's his total income and this is her gross total income. Clear? Very simple, no? You've seen complex problems and this one's very simple. Huh? Yeah, but sometimes simple problems we do make a lot of mistakes. You all know from your own experience. Yes. So how was it? Easy all the way thing?
Yes, ma'am.
Yeah, everything when worked out looks easy, but when we got to work out, only the problem arises. So it definitely requires a lot of practice. Again, the provisions may be forgotten. So with regard to taxation, please read the topics, chapters again and again. See as many problems as possible from your RTP, old question papers. Study material is vast enough to cover. Apart from that, if you have time, you can refer old books so that your concepts will be much more clearly registered in your mind. Okay, so that's a way to crack any with regard to taxation or accounts. A lot of workouts need to be done.